Welcome to the 20th episode Capital TV Midweek Update. My name is JC from TradersTruthReview.com. For our midweek market outlook, you can see from the slide here. Here is the midweek market outlook. Last week, when we thought the Bursa market was going to break into a new high, the 1890-1900, we were fooled by the half-yearly window dressing activity by fund managers and also that rally. While many market observers look at this as a window dressing, which we have been talking about it on several shows before, the market was doing precisely textbook-style uptrend market march. You have reasonable volume, the spread of the bar, as well as economic background to support it. This week, that has changed as Bloomberg reported that our market, the KLCI, valuation is lofty and is more pricey at 16 times for emerging market compared to 11 times for developed nation. In short, we don't deserve to be this high. If you look back on the close on the 30th of June 2014 and compare to the 31st December 2013, the market hardly moved at all. Now, despite the January 2014 pre-Chinese New Year correction, the market has made back all the lost room that it did. Now, the question now remains if Bloomberg say is true and the market is bound for correction, so should we sell all our shares? Right? Not necessary. Now remember, the market is stashed with liquidity from the EPF, and the EPF institutional continue to make headwind to invest workers' contribution into high-quality growing companies in KLCI. Now in our IVSA chart, we have a test T in here. However, the market fell lower, and after that, we have a failed test. This denotes signs of weakness. Temporary SOW will cause the market to move sideways with a bias to the downside. What is SOW, or sign of weakness? Sign of weakness is a condition where demand for the stock is dwindling as more supply is coming into the market. Demand can be reduced more and more investors are willing to dump stock at lower prices, not at higher prices. You heard it first from JC at TradersTruthReview.com. Yes, the market is still on the greenish zone, as you can see here, but we have a support at 1870, right? See here. Now, seeing the IVSA chart, the market is looking biased to a sideways market now, as we have many green up arrow here. See that? You can see it here too. Now, we have the support at 1870. Remember, I just talked about that. Now, bridging this level, the market will tip over and start to move downwards. Now, let's look at our next slide, which is the KLCI foreign fund net flow. You heard first from us at Capital Midweek Update with JC for the foreign fund flow. In our site, TradersTruthReview.com, we noticed last week over here that the foreign funds were somewhere between net buying and net selling for the entire week. That's what we have, the yellow sideways bar. This week, that has changed. Foreign funds begin to sell slowly on the back of a weaker sentiment by the foreign press on the KLCI lofty valuation. This explains why this week we have the red down arrow on your screen. Now the short-term trend has definitely changed to the downwards, but there is also a bias to the sideways market. Notice the sideways yellow arrow that we saw last week. This week is still pointing downwards. When the market failed to breach the 1900 level, price level, investor and trader begin to take some money off the table. For those of you who are new, the blue line that you see here are the daily buying and selling of foreign funds, while the red line is the total accumulation of 5 days, and it's important to see the trend of the buying. You heard it first from JC at TradersReview.com. Now for our next segment in here, which is a stock watch, is QL Resources. For this week, QL Resources with a Bursa Malaysia stock code of 7084, right? QL Resources is one of my favorite stock who have made money for my client way back and it was listed back in 2009. QL is a fully integrated marine product manufacturing, palm oil activities and integrated livestock farming. If you put your money during the IPO time, you will have doubled your money so far. It is one also of the favorite of the financial institution stock that they have owned. Operating out from a factory, big one, in Bukit Jelutong, Selangor, QL has the ability to deliver any products to any clients in this country as well as overseas. Right now, from the VSA chart, you can see that the smart money has completed its accumulation and therefore has broken up the resistance above 3 ringgit 30 cents. The market may continue to move in a bullish trend breakout up here. Now, how high can QL go? That's a good question. There is a chance that QL may break into a 3 ringgit 50 cents level. Fundamental analyst has a target level between the same level to 350 to 360. As you can see from the volume spread analysis chart, we are seeing QL forming a nice support at 3 ringgit 20 cents here. The next term, short term, of course, the target is also 3 ringgit 50. QL is quite a good fundamental stock. However, at these prices, it are rather pricey. PE at 24 to 25 times, and the return on equity is 15%. It pays less than 1% dividend. You get it from our site at traderstruth.review.com. Now let's review the stock chart that we talked about last week was INRE Berhad. Turn our attention to INRE with a stock code of 0166. After INRE broke into a new high at 308, there were a host of profit-taking bars as the market pulled back to $3 and 305. The support at 2 ringgit 90 cent here, right, remains strong. Let the market prove itself as it begins to move sideways. Now, what we need to do is look for sign or strength moving forward. As always, have a stop loss as there's no certainty in the market. Exit if you break below the 2 ringgit 90 cents here, right? And that's for the midweek stock watch. Now, for the message of the day, we usually have is a very interesting one. A test is normally used to find out if there is any more supply in the market. This is usually a smart money specialist or market makers that they will move the price down to find out if there are more orders coming in to sell it down further. If there isn't any more seller, they will mark the stock higher at the end. This is a tactic of smart money parallel to every major big price move. Now remember that. The market is full of people wanting to take money away from you. Study the chart and understand why. If you come to a market unprepared, then be prepared to lose some money, hopefully not your entire wealth. The market has reason to move higher or lower, and the smart money usually test the market, just like some people who test their drinking water if they collected them from a non-trusted source. Now remember the phrase, no one cares more about your money than yourself. Keep tuning to Capital TV Midweek Outlook and look for the shares and the stock that is right for you. Let Capital TV be the market expert, inspire your success for tomorrow. That's all the time that we have. Thank you for joining us, and we will review the stock watch next week, same time, same place, and we welcome your question and feedback. My email is jccapitaltv@gmail.com and the website is traderstruth.review.com. Thank you for watching.